Good day and greetings to Madam. We are from Group 5 and today we will presenting about RHB Bank Berhad. Before we begin, let me introduce our group members. Here are Mohd Nazrul bin Lahaji, Afrina binti Syahlan, Nuraliafitri binti Yusfi Rizal, Siti Asyikin binti Abdullah, and Shairol bin Abdullah. Without further ado, let's begin our presentation.
I am going to take you through our group analysis of RHB Bank Berhad. RHB Bank Berhad is the fourth largest banking in Malaysia. It's founded in 1997 and listed under the code stock 1066. Its headquarters is in Malaysia, but it is competitively present in Asian network. RHB core business segment divided into 5, which is community banking, group wholesale banking, group Sharia business, and group international business, including group insurance. In 1919, is acquisition of same Bank Berhad, Bank Utama, and his launches RHB Islamic Bank has a major milestone for them. The major institution shareholder is include EPF, OSK Holding, and KWSP. Moving on to the slide 4. RHB has integrated its sustainable practice to its core business model. RHB drives sustainable goals through 4 carefully defined ESG pillars, which guide its capital allocation toward eco-conscious projects, trying to achieve net zero carbon emission by year 2050. As you can see in ESG radar chart on the slide, RHB exhibit exceptional performance in sustainable finance, climate commitment, and government technique, where RHB score near top of our metric. This balanced corporate responsibility serves as our baseline in financial resilience. Now let's move on to slide 5, which show RHB financial position from 2021 to 2025. Starting with the asset, total current asset decreased slightly from 73.5 billion in 2021 to 66.3 billion in 2025. However, this decrease was balanced by a strong increase in non-current asset, which grew from 207 billion to 280 billion. Because of this growth, RHB total asset increased steadily over the 5 years. Looking at the liability, also increased from 261 to 323 billion, mainly because the bank expanded its operation. The good news is that total equity also increased every year from 28 billion to 34 billion in 2025. This shows RHB has continued to strengthen its financial position to maintain a solid capital base over the 5. Finally, let's move on to slide 6, which show RHB financial performance from 2021 to 2025. First, looking at total operating income, we can see that it increased overall from 7.79 billion to 8.77 billion. Although there was a small slowdown in 2023, the income continued to grow over the 5 years. Next, operating expenses also increased from 3 billion to 4 billion. This is normal because as a bank grows, it also needs to spend more on its operation. Even with higher expenses, RHB still improved its performance. Operating profit increased from 4 billion 0.47 to 4.62 billion over the 5 years. Most importantly, the net profit grew steadily from 2.62 billion to 3.37 billion in 2025. This shows that RHB has been able to profit from year while continue to grow its business. Overall, RHB financial performance has remained strong with steady growth both in revenue and profit. With that, I will now pass the presentation to my teammate who will explain the prospective analysis and financial ratio. Thank you.
Good day everyone, my name is Afrina and today I will be presenting section 3.1 which is the comparative analysis of RHB Bank Berhad from 2021 until 2025. Comparative analysis is used to evaluate the bank's financial performance over time by comparing its financial statements across 5 years. In this section, 3 techniques are applied, which is year-to-year change, common size analysis, index trend analysis, and together this analysis helps us to understand the bank's growth, financial structure, and long-term performance. Starting with the year-to-year change, this analysis compares RHB Bank's financial performance from one year to the next between 2021 and 2025. First, total assets continue to increase every year. However, the growth rate gradually slowed from 7.34% in 2022 to only 2.34% in 2025. One important observation is the continuous growth in loans, advances, and financing, which increased by around 5 to 7% annually. This indicates that RHB continued expanding its core lending business. At the same time, cash and short-term funds decreased significantly, especially by 42.45% in 2025. This suggests that bank deployed more of its cash into higher yield lending activities instead of keeping idle cash. Looking at the income statement, interest expenses rose sharply because of higher funding costs and the interest rate environment. Despite this challenge, RHB maintained strong profitability with a net profit increasing by 11.16% in 2024 and 7.83% in 2025. Next is the common size analysis. Common size analysis expresses each financial statement item as a percentage of the total, allowing us to evaluate the company's financial structure. The largest portion of RHB's assets was consistently loans, advances, and financing. Their contribution increased from 67.31% in 2021 to 69.23% in 2025, showing that lending remained the bank's main sources of income. In contrast, cash and short-term funds declined significantly from 6.85% to only 1.86% of total assets. This reflects the bank's strategy of investing available funds into loans. On the liability side, liabilities consistently represented around 90% of total assets, while equity remained around 9 to 10%, which is considered normal for commercial banks. In the income statement, net interest income declined because funding costs increased. However, operating expenses also decreased as a percentage of income, helping RHB preserve its overall profitability. Lastly, the index trend analysis measures RHB's long-term performance using 2021 as the base year. The analysis shows that total assets continue growing steadily, reaching an index of 102.34% in 2025. Loans also increased to an index of 105.51%, confirming that lending remained the bank's primary growth driver. On the funding side, customer deposits remain relatively stable with an index of 101.19%, while shareholders' equity increased to 105.10%. This indicates that RHB's expansion was supported not only by liabilities but also by stronger internal capital. Although profitability weakened during 2022 and 2023 because of macroeconomic conditions, net income recovered up to an index of 101.97% by 2025. Furthermore, profit before tax reached 108.91%, showing that earnings grew faster than total assets. Therefore, the index trend analysis suggests that RHB achieved sustainability, long-term growth supported by stronger profitability and a solid capital base.
Hello, my name is Nuraliafitri and I will be discussing about the financial analysis of RHB Bank. Over the past 5 years, RHB's profitability has been stable. Return on asset held around 0.9% and return on equity improved to 9.85% by 2025. However, net interest margin fell from 1.4% to 1.08% due to rising funding costs. On the positive side, their cost-to-income ratio stayed below 50%, showing strong efficiency. Solvency remains healthy with debt to equity around 9.5 times and equity to assets at 9.5%. Market confidence is growing. Price to earnings rose to 10 times and price to book is approaching 1.0. Most impressively, dividend yield remains at 6.5 to 7.5%, making RHB an attractive income stock. In summary, RHB demonstrates strong financial fundamentals, stable profits, efficient operations, and a solid capital base. However, two key risks stand out: margin compression and reduced liquidity buffers. Moving forward, RHB should focus on growing low-cost current accounts and saving accounts deposits, as well as diversifying non-interest income. Overall, RHB is a resilient bank with a positive long-term outlook.
For the prospective analysis, we applied the percentage of sales method. Since RHB Bank is a banking institution, total operating income was used instead of sales revenue as the forecasting base. Based on the historical CAGR of 3.02%, total operating income is projected to increase from 8.77 billion to 9.03 billion in 2026. Consequently, forecasted net profits is expected to increase to 3.47 billion, while retained earnings continue to grow, indicating stronger internal financing capacity. The pro forma statement of financial positions indicates continued growth in RHB Bank's assets, liabilities, and equity. The additional funds needed, or AFN, is negative 506.64 million ringgit, indicating that RHB is expected to finance its future growth using internally generated funds without requiring additional external financing. Overall, the forecast suggests that RHB Bank will remain financially resilient, supported by sustainable profitability, strong retained earnings, and prudent financial management.
With our capability stability, we can maintain an optimal leverage position with a 90.45% debt ratio and a resilient 9.47 debt of equity ratio, solidly backed up by our domestic equity base. We also can continue to serve as a top-tier defensive asset, delivering a strong 9.5% dividend to shareholders. Turning to operation, our efficiency is driving exceptional earning velocity. Our return on equity reached 10.5%, accelerating us toward our 12% mid-term target. This performance is anchored by strong cost discipline, keeping our cost-to-income ratio at 47.3%, comfortably below the 50% industry ceiling. This efficiency successful cushion our net interest margin at 1.88% despite a massive 84% year-on-year surge in sector funding costs. Finally, regarding liquidity, our cash buffer sit at 1.66% after aggressively deploying short-term fund into higher yield loans, while our 30.5% CASA ratio provides a sticky structural defense. We are closely manage a high vulnerability to deposit withdrawal ahead of upcoming micro interest rate shift. Today we look at why RHB is a fantastic choice for investors. Thanks to four main strengths. First, large investors are showing growing trust in us. This is driving our market value up and proving the bank long-term strength. Second, we offer highly reliable cash return. We consistently pay a strong 9.5% to 7.5% dividend to our shareholder, backed by a stable profit sharing payout plan. Third, we are successful protecting our profit margin by growing our everyday saving account deposit. We have shielded ourselves from rising borrowing costs and keep our main profit rate steady at 1.88%. Finally, we are keeping our business costs incredibly low. Thanks to fast-track digital automation, we keep our cost growth to just 3.3%, making us one of the most efficient banks in the market. Together, this move make RHB a safe, high-earning, and smart